Our currency war is a hot topic in the market, especially between Japan and the U.S. and, of course, with Nigeria adopting a flexible exchange rate policy. What does this mean to the local economy and global markets? VOA Channels TV business correspondent in New York City, Jill Maladrino, had a conversation on this with John Carter of Simpler Options.
While there's significant long-term potential for Africa in terms of expanding its industries, near-term there are some concerns because of currency fluctuations. John, explain to us how foreign currency impacts the local economy and global markets.
Sure. From a bigger perspective, the main thing to keep in mind is that if a country's currency is cheaper than their trading partners, then the exports that they're sending out are going to be more attractive. So it actually will increase exports, which also increases employment. So it's a good thing to essentially have a weak currency with your trading partners. On the other hand, if you're importing a lot of stuff, it's better to have a stronger currency or a currency that's rising against your trading partner, and then that way the imports just become cheaper.
Right. So Nigeria on Tuesday, they had made a move from going from a fixed rate to a flexible rate. Could that be good for the economy? Because there are struggles there as imports have gotten so expensive and they're exporting less because of the oil crisis.
So the good thing there, that does offer a lot of flexibility in terms of if they would like to get more exports out of the country, then if their currency continues to fall against the dollar, then that's a good thing for that. If on the other hand, the idea is like, especially if they're trying to figure out what exactly to do with it, if it's something where it's like, okay, the currency is strengthening against the dollar, that's great, because that's the opportunity to go and buy goods to import in because it's going to be cheaper against the currency.
Do you think the currency wars are heating up at this point globally?
I think that's the big economic war going on right now. Is it's a race to the bottom, where you've got the big economies, whether it's Japan, and at this point now China, are deliberately devaluing their currencies, specifically against the U.S. dollar, so that they can export more to America. And the U.S. is also have been trying to figure out, well, if our dollar's too strong, then that's going to hurt our economy as well. And really, at the end of the day, every major economy out there wants a lower currency to kind of keep that going, to keep employment up. And it's a war going on right now, and it's a battle.
Okay. All right. Thank you very much, John.
Absolutely.
For Channels TV in New York, I'm Jill Malandrino.
For the first time in nearly 7 months, Brent oil futures climbed above $50 a barrel today. How sustainable is this trend? Let's talk to Damilare Adeshola, research analyst from Financial Derivatives Company. Good afternoon, Damilare. Now, oil price went above $50 per barrel today. What are the major drivers of the market now?
Right now, just production and supply. So what we have been seeing is there's been a shortfall in production, and so countries like Canada, which is a major producer, had a wildfire, and so that has affected their operations, and also Venezuela and Iraq, but also more closer to home, Nigeria as well has had some issues with the Niger Avengers and all the sabotage, and so they have been, day after day, we find that more and more pipelines have been. I think this morning there was a Chevron pipeline which had been sabotaged by this group. So all these things are affecting, and there's been a shortfall of for Nigeria of over 800 million barrels per day. So that has been what has driven supply down, and because supply is down now, that's what is pushing up the price.
Now, for countries such as Nigeria that depend on oil for their foreign exchange earnings, any reason to rejoice now?
Yes, definitely, because it means more revenue for them. But then it's only for countries that are not experiencing what Nigeria is experiencing as regards to lower production. Because if your production is low, and even if the price is high, you cannot really benefit from the higher prices because of your low production. So in essence, it's as if there wasn't any increase in price anyway. But in general, all the other oil producers and oil exporters will definitely be rejoicing at this time. Although most of them are still looking to diversify their economies, this can still provide a soft cushion for them meanwhile while they move to diversification.
How sustainable is this rise that we're seeing now?
Quite sustainable because, as I mentioned, why the supply has dropped has been because of infrastructure issues, so damages to the infrastructure, and this will take time to repair. So in the short run, definitely the price will still hover around this $50 per barrel that we're seeing now, plus or minus 2. But then once these repairs take place, and once I think Nigeria has started their own, Canada has made great strides to repair most of their infrastructure. But once these start to come in, we might see prices maybe move down a little bit or stabilize. But then at the same time, as countries start to recover, and because that's the supply side, but on the demand side, as countries start to recover, as economic growth is boosted in other countries, they will demand more oil. And so from that demand side, we may see a further push in price. So we're looking at something at about 50, 55 by the end of the year.
Goldman Sachs said earlier this month that it now expects oil prices to consistently hit $50 a barrel. That's in the second half of 2016 and $60 by the end of 2017. Do you see that happening? $60 a barrel?
Yes, definitely. But I think personally, I agree more with Citibank's forecast. They said that they may be in the short and medium term, the oil prices might drop a little bit before they go on to increase, as opposed to it being a consistent increase. So definitely, by the time we get to the end of 2017, we should be looking at something about $65 per barrel.
OPEC members are getting set for the June 2 meeting. Do you think they will still vote to maintain status quo?
Yes, definitely, because first of all, the reason why they were considering the production cut earlier was because of the price. But now that price is increasing, there's really no need for them to do the production cut. And also the internal squabbles that is going on in between them, Iraq not wanting to agree and Saudi Arabia not wanting to do so, Iraq doesn't agree. So those things will play, and most likely they will just maintain the status quo.
All right, thank you very much, Damilare.